Hello and welcome back to Understanding Crypto. My name is Herve, and every other day on this channel I try to bring you cryptocurrency in the easiest way possible on the internet. We cover things like predictive analysis, research and tutorials to help provide you with the information you might need as you navigate your way through this treacherous marketplace. Yesterday we spoke about Mr. Bitcoin coming up to this zone right here, which it has rightfully done, and we are currently witnessing some type of rejection. However, there is some data right there that I wanted to bring to your attention. So we can see, now let me just briefly explain this in some other slide right here. So I did tell you, and I've told you many times, that markets generally move in threes, yeah? So you'd have first, second, and third, like so. It's the same to the upside as well. Mostly it's threes, yeah? Now, when price comes down like so, when you see price coming down like so, and forming these, so you have a first high right here, second high, which is a lower high to this one, yeah? And then you have this third high right here, which is also a lower high to this one. This is quite literally what they call downtrend. Yeah, it's a downtrending market, and you can clearly see that. Now, if you have some sort of formation right here, which you would call a double bottom, or if you have a high, or say another lower high right here, and a move down like so, and then another high like so, and a move like so, this is what you'd call an inverted head and shoulders, yeah? If this successfully goes above this one, it is then correcting this entire trend to the downside. So it's no longer a downtrend once you break this one to the upside right here. So if you can come back above this one like so and start to move back to the downside, you can't continue to say it's still a downtrend. No, it's not still a downtrend because it has corrected this move like so. So just going back above here is correcting this entire trend to the downside. That's exactly what Mr. BTC has done. So here you can also see the same thing happening. Let's put this in bold. So here you can also see the same thing happening. We have the first move to the downside, a retracement back up. This forms the lower high to this one. And then you have the next move to the downside, a move back up. This then forms a lower high to this one. And then you come down like so, but instead of forming some sort of inverted head and shoulders, you form a double bottom. So this double bottom then propels the price back up. But then now the price goes higher than this previous lower high right here. So instead of just forming another lower high right here, price successfully goes above this one, forming a new high, a new higher high to this one. So whatever retracement we are to have here, we have to keep in mind that the trend to the downside has changed already. So when it does come down here, we have to consider that it could potentially be forming a new higher low to this low right here. So consider this low right here to be just one candle. And so when we then now come to the downside right here, or if we come to the downside right here, we'd expect some sort of low that is higher than this low right here, than the current low right here. Yeah, so this would still tie with my idea of BTC coming back to fill that CME gap. Now, it might very well just go straight up, yeah? Nobody knows. It might very well just go straight up. But do we have the data to prove that it will go straight up? No. We are on the idea that there is a CME gap right here. Let me quickly go to that if you did not watch our previous video. There is a CME gap that will be filled at some point. This CME gap. And so if you are longing at any point, you have to know that price, this is a magnet right here, and it will eventually find its way down to this gap. So this can also mean that the entire move to the upside was just the first wave of the Elliot wave sequence. And if that's the first wave, then we could be expecting that the filling of that CME gap will be the second wave. So if you zoom in, you could call this right here to be the first wave, and second wave right here, and potentially this was the third, fourth, and then the fifth wave right here. Yeah, you can try to figure it out any way you want. But the idea is that this entire move to the upside could have just been the first wave, and filling that gap will be the second wave, then the third wave, fourth and fifth. We will look for those targets in a moment. So this entire move to the upside, which we can just put this in bold, could have been the first wave of the Elliott wave sequence that corrects the entire downtrend. Now, the reason why I say could have been is because, as you learned from the video yesterday, we have this 2.618 right here to deal with. However, the 1.618 on the higher time frames to the downtrend can easily be the bottom. So it's not like I'm saying this level right here, this level at 45.44 must happen. I'm just saying that it's something to watch out for, because if we do not hold at this zone right here to form a new higher low to this previous low right here, then this will become the new target. Yeah, that's the issue. But the reason why I am still thinking that it could hold this zone is because first, we have put in a new high to this downtrend right here, and on the higher time frames, the 1.618 usually can hold to be the bottom of the downtrends. In an uptrend, the 1.618 is not that strong. It will only act as a top for a weak trend, but in a strong trend, it may not hold at all. Price might go right through it like a hot knife through butter. So that's basically the new data that we can see from here. Now, that zone that we had to hold was 58.3, yes? But now that we have this new data, we have a new zone that we should hold, which will be the 0.236 of the entire move to the upside. 0.236 now will put us at 56.8. So we have to hold 56.8 on the daily to assume a new uptrend. If we do not hold this zone, if we come and we are trading below this zone, yeah, that becomes very risky at that point. Now, another thing that we could also look at is the liquidation heat maps. If you have not watched my liquidity videos, I will leave that video at the end of this one, so you can just click there and watch. So if we look at the liquidation heat map right here on the weekly time frame, we will see that we have some liquidity somewhere around 56.1. So that is the lowest level from the weekly time frame. On the 3-day time frame, we do have some liquidity somewhere around, that's 58.2. So these people will be liquidated if price was to come down to this zone right here. Now, on the daily, or say the 24 hourly, we can see that these people already got liquidated right here, and then price continued to the downside. I'd expect it to go somewhat higher though before we have another type of correction, if at all we are to have a plummet. Again, remember that this zone that we talked about was a singularity. Yeah, we don't know exactly what's going to happen here, but I'm mostly on the idea that that CME gap will get filled, and there is some liquidity there as well, which is spicy for the market makers. From this particular candle that dropped like so on the 4-hourly time frame, you can just go here and use your Fibonacci levels to know where this thing will most likely go. Usually I'd use the 0.382 or 0.618. To the highest, I'd use the 0.786 for a possible retracement back to the downside. Now, given that the 0.5 is just where we had this lower high right here, that could be the zone where we do reverse, but the highest is this 0.786 right here. So that is basically the highest zone that the Fibonacci can show us for this particular candle. If the move is really strong, it will reach this 0.786, which is at 64.3. So that's the highest for this particular candle. That's the highest level of retracement. Another thing you should know is if this was actually the first wave, yeah, assuming that we do come down here and hold this zone right here, if this particular move to the upside was the first wave, then wave 3 will be either 1.618 times the length of this wave 1 or 2.618 times the length of this wave 1, meaning that this will be the next resistance, this 1.618 right here, which is at 71.1. Either this one or 2.618, which is 81.5. So the target for the potential wave 3, if we do hold this 0.236 right here at 56.8, remember that the liquidation there is actually at 56.1. That's the lowest liquidation on the weekly time frame. So that will most likely be a week. If we do wick down there and come back, we should be holding this 56.8 right here, which is at 0.236. A confirmed hold of this zone will be targeting these other levels right here. We'll be targeting this 1.618 or 2.618. The potential stop loss for such a trade will be this low right here. So going lower than this particular low right here will change the entire trend, will mean that this was just a fake move and then we are going to plummet even further. So if you are to enter a possible position here on the idea of longing wave 3, this will be your stop loss. So your stop loss will be below this previous low right here. But the whole idea is to hold this zone, because if we don't hold it, then we may be facing this, our arch nemesis right here at the 2.618. So yeah, that's going to be a problem. If you invert the chart, the same reason why we think it will go up like so, yes, the same reason is the exact same reason why it could potentially head up to here, which is why I'm saying that the reason I'm more optimistic of it holding this zone is because we have shown signs of correcting the entire trend to the downside. So since that has happened, we now have one clue on the idea that we might hold this zone if we do come back to this region right here. Now, if it just goes straight up, then I cannot trade it. Yeah, if it takes out this previous high right here at 64.993, yeah, if it takes out this high and continues straight to 71 and goes to 80 something, then I can't trade it. I can only trade it if it comes back down here. That way I have a thesis and I have an invalidation for that thesis. I hope we are all in understanding as to what is currently going on. Yeah, that's pretty much the update that I wanted to bring to your attention. The new data is that this thing has now put in a higher high to this one right here, showing more signs of it holding this particular zone. The new zone that we must hold is 56.8. We must show signs of holding this zone right here, and that way we could be on the idea that it will not sink down to this 43-45k area. So that's basically the new data. Note that it must not be a straight line to the downside like so, yeah? It could still just be something like so and consolidate here and then plummet later, yeah? So it's never, I don't do time analysis. I only have the, the price axis here. I don't have the time axis. So that's basically it. If you must take a short, then I would want to bid on that type of short somewhere around the 0.5 actually. Yeah, stop loss must be above that previous high or above this candle close, but above this previous high is good enough. If you wanted to DCA in such a position and have an average entry, which will possibly put you at the 0.618, that DCA entry will be best put at the 0.786 right here, and another average DCA entry will be the 0.65, which will be exactly $64,000. So yeah, that will be the possible trade that you could take here, because taking this high will most likely head even higher. So yeah, that's pretty much it, folks. I hope you understand. That's the latest update. That is the new data that we have. If you have any questions or remarks, let me know in the comments. If you like the video, do like the video, subscribe to the channel, have your notifications on, and I will see you in the next one. But until then, stay safe.